Let's start our discussion of personal property tax exemptions by looking at the exemptions that apply to individuals. The primary exemption for individuals is for household furnishings and effects at the person's domicile. This includes the personal property kept in or about the house or garage, such as furniture, appliances, and yard tools. The domicile of a person is the place he or she calls home and intends to return when away. Domicile is the place where the individual has his or her principal and legal home and is the place where family, social, civic, and economic life is centered. Indicators of domicile include where the applicant votes, registers a car, spends most of his or her time, replies to the census, files tax returns from, and has ties to the community, such as where the applicant's spouse and children live, where bank accounts are kept, and where memberships in churches, clubs, and social organizations are maintained. All individuals get an exemption for their household furnishings and personal effects located at their domicile. However, household belongings kept in a vacation or other residence are not exempt. The personal property has to be kept in the home that is the individual's domicile to be exempt. Individuals, including individuals doing business under another name as sole proprietors, are also exempt on farming utensils and tools of trade of a mechanic. First, non-mechanized farming equipment is exempted. This means hoes, rakes, and similar handheld items. Tractors and heavy farming machinery are not within the scope of the exemption for farm utensils. The tools of trade of a mechanic are also exempt. A mechanic's tools of trade are hand tools, including handheld electrical devices used in the vocation of the owner, but not lathes, table saws, routers, and other machinery that is not readily portable. A mechanic is a tradesman, such as a plumber, electrician, carpenter, or auto mechanic, and does not include a professional such as an accountant, lawyer, dentist, or doctor. There are no exemptions specifically for partnerships, associations, trusts, and other unincorporated business entities. They are taxable on all personal property, except motor vehicles, boats, and other properties subject to another excise, tax, or charge. Partnerships include limited partnerships and limited liability partnerships. Note again that federal tax status of a partnership, association, trust, or other unincorporated entity determines its local tax treatment. If it files federally as a corporation, it is treated as a corporation instead and entitled to the applicable corporate exemptions. A limited liability company, or LLC, which is an unincorporated business structure allowed under Massachusetts law, is taxable on all its personal property, except for items subject to another excise, tax, or charge. Under federal law, the LLC has the option of filing its taxes as a partnership, corporation, or disregarded entity joining as a consolidated return with its parent company. LLCs can have one or more owners, which are called members. The members may be individuals, partnerships, corporations, or other entities. The LLC is a separate legal entity, however, so its members are not the owners of the LLC's personal property. If the LLC files federally as a partnership, it is treated as a partnership and is taxed on all of its personal property. If it files as a disregarded entity, it is treated as a branch or division of its owner and is taxable on all of its personal property, even if it has corporate members or parents. If it files as a corporation, however, it is treated as a corporation instead and entitled to the applicable corporate exemptions. Let's review what we have learned in this lesson. First, individuals are exempt for household furniture and effects at their domiciles, farm utensils, and mechanics' tools. Second, there are no specific exemptions for partnerships, associations, trusts, and other unincorporated entities. They are taxable for all personal property except the items subject to another excise, tax, or fee. Third, limited liability companies, or LLCs, are unincorporated entities and taxable for all personal property, except the items subject to another excise, tax, or charge, unless they file federally as corporations. If so, they are treated as corporations for personal property purposes and entitled to applicable corporate exemptions.